to be perfectly frank, I think, what you were just talking about is one of the biggest issues. That path to profitability is what is potentially under threat if we see increased regulation around workers' rights. And I think that is kind of the biggest reason we've seen so much anxiety injected into the trading this morning.
Right, and there was a lot of talk and hype going into today. I noticed that there are six book runners leading this deal. You have, let me just list them for you. You have JP Morgan and Goldman Sachs, who are the primary book runners, but then you also have participation from Bank of America Merrill Lynch, Citi, Jefferies, and Numis. They were all part of the syndicate here. How much of the fault can be rested at the hands of the banks and the guidance that they came out with, the level obviously much higher than the market, the broader market is giving it a value for in secondary trading now?
Yeah, look, I mean, there was a great deal of excitement around this IPO, and that syndicate obviously had or has high hopes for that. I think it's also important to point out the fact that some of the excitement, as much as obviously today and has been disappointing thus far, some of the excitement about the long-term growth prospects absolutely still exists. We need to remember that some of the kind of the biggest USP, if you like, of Deliveroo, one of its unique points is that it's offering restaurant quality food. So this does set it apart from your more traditional kind of takeaway options. That dark kitchen proposition as well, I think, is something that's potentially very exciting. So I don't think it's necessarily fair to lay blame here. There are still some bright spots, if you ask my opinion.
Sophie, Jemana raised the point around the Deliveroo's issue with profitability in what many would say were ideal conditions for a food delivery company. When we think about 2020, everybody's stuck at home, not allowed to dine at restaurants. If the company can't make money in a year where nobody's allowed to eat out, nobody's allowed to really do anything, will they ever be able to make money? Can conditions ever be better than they were in 2020 for a food delivery company?
That is the question, really. I think there is a huge argument to say that looking at this from a more kind of cynical point of view, conditions are about as good as they will ever be, when everyone's literally locked in their houses. But what they are really banking on is that what we're going to see is where we're spending so much more time at home, even when the pandemic's gone. So, we're working from home more, for example, that there's going to be that kind of sustained uptick in demand for restaurant quality delivery. Now, whether or not that will come to fruition in the way that they're hoping, they need to build some pretty enormous scale to get those margins off the ground, to get them to where they need to be. But fundamentally, you are correct. That is the biggest question. Are conditions actually going to get any better? And is the current valuation, justified? It is sadly a case of wait and see there. It's a big question.